Okay, I wanted to talk for a minute about cost of goods sold and gross profit. So looking at a multiple step income statement, what we would do is we would have total sales minus cost of goods sold gets you to gross profit. And then we would subtract out our selling expenses and we would list each of those. And then we would subtract out our general and administrative expenses. We would list out each of those, and then we would have a total expense, and then that would get us to net income. All right, so which of these accounts are our expenses? Well, our selling expense is expenses, our administrative expenses are expenses, but our cost of goods sold is also just an expense. It's just that we list it out separately up here. Why? Because it is such an important number, because it tells us what our profit was just by marking up our good, whatever it was that we sold. So let's say that we're selling one car. If we bought that car for $10,000 and then we sold that car for $20,000, it's very important to show that our gross profit on that was $10,000, because we can see that we marked that car up $10,000, so our gross profit was $10,000. Then we know from there we've got to have enough leftover profit to cover any selling expense here, any administrative expense here, to still have some net income there. So that's why we move that expense up there so that we can break out our gross profit. So let me know if you have any questions on that. Thanks.